Welcome to the Team 360 final presentation. My name is Zach Litz, and I will be providing an overview of the business strategy, the market, and the marketing strategy. Team 360 presents the Search 360 platform. The Search 360 platform provides business-to-consumer businesses with an evolutionary method of targeted advertising and promotions. The Search 360 platform incorporates real-time consumer location-based data to allow retail and service-based businesses to actively engage consumers within a specified distance. This provides new, powerful, and unique advertising and promotion opportunities for retail and service-based businesses. The Search 360 platform has two components. The first component is for the consumer. The consumer smartphone application provides a mechanism for consumers to read and leave reviews of businesses as well as to receive promotions that may be of interest. The smartphone application will also serve to collect the real-time consumer location data that is at the heart of Search 360. Retail and service-based businesses will access the Search 360 platform to set constraints on advertisements and promotions they wish to publish. An example of this is as follows. Let's say Joe is an avid golfer. In the past 6 months, Joe has used his phone to check golfer rankings, read reviews on new clubs, and even leave a review for the local golf course. Imagine one Sunday morning, Joe is driving to breakfast when he passes a golf course he has yet to try. If the golf course uses the Search 360 platform, they could easily send him a coupon for 30% off his next round. Or maybe they could give him a buy one get one free coupon if he stops for a round right now. As you can see, the possibilities are endless and extend far beyond golf courses. The online advertising market will generate $50 billion in revenue this year. Local online advertising will generate $8 billion in revenue this year. Business-to-consumer businesses, primarily in the retail, service, and restaurant industries, are the primary target market for Search 360. In the U.S. alone, this equates to over 1.2 million businesses that are potential customers for Team 360. Search 360 services and products are sold to retail and service-based businesses using a tiered pricing and tiered feature structure. This strategy will allow many businesses to maximize value by paying a price that is directly proportional to any increase in revenue. This maximizes incentive to use Search 360, allowing for deep market penetration. Initially, small businesses serving local markets will be aggressively targeted for sales. Tiered pricing and tiered feature sets ensure that small businesses will be able to use Search 360 without assuming financial risk. This gives small businesses plenty of incentive to use Search 360, which will ensure a wide market acceptance.
Thank you, Zach. My name is Andrew Hatano, and I will be providing overview regarding Search 360's 5-year plan, including our milestones. Our main goal is to become the leading mobile advertising and promotional content delivery service with revenue around $250 million by year 5. We believe we can achieve this due to our unique feature of targeted marketing as explained by Zach on previous slides. Our milestones will include 1. From month 5 until month 18, we will complete prototype application and feature set. During this process, we will also seek initial customers and product feedback. 2nd, create materials and demonstration to approach venture capitalists with main purpose of obtaining funding. We expect to receive funding by month 20. 3rd, starting month 21, we will aggressively build consumer base and acquire business customers as we continuously try to expand our company. 4th, around the mid of 2nd year, we will start charging businesses for database access on top of percentage of the business revenue. 5. Starting month 31, we will focus on expansion from regional to national, which then will continue to expand to international market. 6. By year 4, we will begin development of secondary products such as real-time dating, garage sales, or carpool application.
Thanks, Andrew. Hello, I am Manu Juyal and I am going to present the financial performance and growth model for our company. This chart shows our 5-year growth model. As you can see, we estimated about 150% annual growth in first year and 250% annual growth in subsequent years. This is a very conservative estimate as compared to 425% quarterly growth rate of Groupon. I stress it's 425% quarterly growth rate for Groupon. So we drew our estimate from Groupon's financials but took a very conservative approach as we anticipate more companies making entry into mobile deals and recommendation landscape. We can also note that we expect our expenses to grow at a fairly constant rate in coming years as we expand our operations. However, we don't expect any sharp rise because we would already have our research and development infrastructure set up in first 2 years. Due to the nature of our business, we don't need to make any heavy equipment or infrastructure investment. As a result, we expect our gross margin to grow 50% and 75% in year 1 and year 2 and will reach up to 95% in year 5. The main reason for this is that we would be catering to Southwest region in year 1 and year 2, and during that time we would be testing our application, making it more robust, and after year 2 we will go national. We will keep our account receivable days 10%, which means we would be collecting cash from our subscribers every 30 to 45 days cycle. And we also expect to spend 100K every year in the purchases such as hardware upgrades, software and licenses, among other things. And they all will be depreciated using the straight line method. This is our income and revenue growth chart, and as you can see from this chart, we expect to incur high initial expenses due to our investment in R&D, equipment purchases, software licensing, property leasing, etc. We expect to reach break-even point somewhere in the beginning or towards the middle of year 2. However, after year 2, we expect our revenues and margins to grow very fast as compared to expenses, as we will be making our products available nationwide, and we expect that will increase our revenue generation. Since we would have already invested in infrastructure, equipments and other expenses in year 1 and year 2, we expect our expenses to grow at a very moderate level and mainly towards marketing and sales effort. Here we are going to discuss our estimated investment needs and its usage. Based on our financial analysis, we would need about $1 million of investment in year 1 in order to support our operations in initial year. As seen from the chart, major chunk of this fund, which is about 40%, will be used in research and development, as this is the heart and soul of our business. We will need to invest heavily in R&D, which includes developing algorithms and methodologies to improve the relevance of our deal recommendation engine and to maintain our competitive edge. We would also be spending majorly in marketing and sales, which is about 25%, and this would help us reach our targeted subscription level. We would also need to use about 10% of this fund in updating our equipments with new hardware, softwares, and also for buying new licenses. And finally, 15% of this fund would be used for general and administrative purpose, which would mainly include hiring computer scientists and engineers along with network administrators to work on our applications and systems. Let us discuss ratio analysis. Based on our financial analysis, the profitability of our company is expected to reach 65% by 5th year. The return on asset is expected to reach 75%, and return on equity would reach 76% by year 5. As a result, our company with its product and its returns is a highly attractive investment option for the venture capitalists and other investors too.
Thank you, Manu. The last part of our presentation will cover topics regarding IP protection, management team, and exit strategy. Few items that Team360 believes require intellectual property protections are employee agreement, register patents to protect processes, establish proper securities to protect trade secrets, and register trademark on Search360. Search360 management team will include the following: Zachariah Leach, founder and CEO. As CEO, Mr. Leach will be responsible in formulating long-term strategy, overseeing product development, managing the anticipated growth of the company, and interfacing with investors, major businesses, and customers. Andrew Hartono, CIO. Mr. Hartono's primary responsibility as CIO will consist of overseeing application and database design and creating plan on company resources utilization. Jonathan Persico, Marketing Director. Mr. Persico will assume title of Marketing Director with main responsibility in creating marketing program, including long-term plan, presentation, brochure, advertisement, and promotional items, with main purpose of attracting new business partner and consumers. He will also in charge of company communication with the media. Manu Juyal, Director of Research and Development. Mr. Juyal will act as Director of Research and Development with main responsibility of developing the application and database. Mr. Juyal will work closely with Mr. Hartono in developing test cases for quality assurance. He will supervise 5 programmers and 2 quality assurance personnel. Such 360 advisors will include Dan O'Neill. Mr. O'Neill's role will be that of an advisor for Search 360. Mr. O'Neill has vast knowledge and experience in guiding entrepreneurs to create and grow their technology ventures. His role consists of helping Search 360 team in formulating and implementing marketing strategy, creating elevator pitch, questionnaires for customers interviews, and business plan, and also guiding the team through each steps of the entrepreneurship process. Search 360 exit strategy as follows. Team 360 expects that growth in the first 5 years will place our application Search 360 in a strong position to become the major player in mobile marketing sector. Competitors such as Groupon or Living Social may consider a buyout strategy. Large companies are increasingly recognizing that stock options are no longer the lure they once were. The most cost-effective way to bring in new talent, fund R&D, increase efficiency of their marketing method and consumer and business database is simply to buy up innovators and their ideas. We predicted that our company value is to be around 300 million and the figure may be pushed higher in negotiation for the sales of Search 360. The investor will receive rate of return around 20% up to 40%. This is the end of our final presentation. Team 360, which includes Zach Litt, Jonathan Persico, Manu Juyal, and myself, Andrew Hartono, want to thank you everybody for their time, especially to Mr. Dan O'Neill, who guides our team through each step in FSE501 Technology Entrepreneurship class. Thank you.